Hi, everyone. This is Mathis Connell with Connor Management Group, and this is the Best Stocks to Buy podcast. Today is Tuesday, August 28th, 2018. And this week, we're going to be looking at the best growth stock to buy right now, number 2 for the month of August 2018. Here on our opening slide, it's called the setup and the approach. And the objective of this podcast is to present to you a high probability upside potential stock. Now, financial model is the tool that we use, that we developed, that uses multiple valuation approaches across over 6,000 stocks that we review. So the view you're getting is not driven by some sensational headline and some popular publication focused on increasing readership, but simply on presenting a great investment opportunity to you right now. Easy way of thinking about our approach is the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, I truly viewed creating such a model as daunting, but I believed I was well prepared for the challenge. I have both computer programming experience as an engineer and over $15 billion of transaction experience as a banker. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, then added some of my own tested intuition to implement new data sets that weren't even available as low as 10 years ago. Furthermore, my model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections that they share with the public. Now, a point worth remembering, these views are based on today an unforeseen economic report, a regional conflict, a revised policy change can revise these expectations tomorrow. Benefit of using a professional money manager like Connor Management Group is having someone experienced in making educated assessments about the uncontrollable, as well as having someone to readily share their opinion as to whether a particular event is reason for concern. And now, so what did our model find for you this week? This week, the best growth stock to buy we found is in the cosmetics industry. On to the industry overview slide. The cosmetics industry is comprised of internationally publicly listed cosmetic companies. Here are the 10 largest competitors by market cap. I'm sure you've heard of some of them. Estee Lauder, Coty Incorporated, ELF Beauty, Helen of Troy, Inter Parfums, New Skin Enterprises, Revlon, Regis Corporation, Sally Beauty Holdings, and Avon Products. The growth drivers in this industry right now are a strong domestic GDP, routine use of products by the general population, steady and predictable earnings, and growth in emerging market countries like China, India, and Russia. So the industry challenges right now, increasing reliance on just-in-time inventory, retail shelf space competition, meeting the needs of the graying baby boomer generation, technical innovation for higher margin products, and a growing private label business. And now for the big reveal. The best growth stock to buy this month, or I should say number 2 this month, is a company called Sally Beauty Holdings. The ticker symbol is SBH, and we see this 6-month upside potential at potentially greater than 50%. The stock is very undervalued right now, and we just believe it's being overlooked, but it has a very high upside potential. On to the quick facts slide. Sally Beauty Holdings distributes professional beauty supplies in the United States and internationally. The company operates in 2 business segments. The Sally Beauty Supply segment sells branded and labeled products used for hair care, nail care, and appliances to retail customers and professionals. The Beauty Systems Group segment distributes professional brands to salons through a sales force and stores for professionals. The company has about 4,965 stores, including 187 franchise stores that are located in North America, Europe, and Japan. The website is www.sallybeautyholdings.com. The company is headquartered in Denton, Texas, and they were founded in 1964, and they have 29,475 employees. So, with about 5,000 stores, it's a good chance you've seen their storefronts before. They're definitely have a large footprint throughout the states. On to the next slide. It's called the metric slide. The annual revenue for Sally Beauty Holdings over the last 12 months was $4.0 billion. Their net income was $239 million over the last 12 months. And the cash from operations over the last 12 months was $403 million. So this company, they have about a significant amount of revenue and generate quite a bit of cash every year. The operating margins for 2018 are tracking to be 14.5%, and for 2019, the operating margin is expected to improve slightly to 15.0%. On to the valuation metrics. The trailing PE ratio for Sally Beauty Holdings right now is at 9.1, and the forward PE ratio is 7.0, and that's good to see. We expect earnings to increase. And also, these PE ratios are at very low levels on a historic basis, which is one of the drivers for our optimism on this name. The PEG ratio is at 1.1. The price-to-sales ratio is at 0.5. And the enterprise value to EBITDA ratio stands at 6.1. The company does not pay a dividend, so dividend yield is 0%, as well as its average dividend payout ratio is also at 0%. The next slide is the price chart for Sally Beauty Holdings. About a year ago, the stock was around $18, and it's now a little over $15. And the stock price pullback in late April was due to the declining product sales in a few target markets. And so the stock has pulled back a bit as they've made slight changes to their strategy, as we'll be talking about in the next slide. The next slide, it's called Looking Back and Looking Forward. Looking back, sales declined slightly during the first quarter of 2018 due to intense competition and some weather-related disruptions. The company introduced new products, in-store programs, and customer loyalty programs over the past 12 months. The company enlarged its footprint in Canada by acquiring a beauty supply distributor in that region, which resulted in an additional 21 stores, a warehouse, and, of course, more staff. Furthermore, they invested in its e-commerce platform to increase the delivery speed to its customers. So that was looking back. Looking forward, solid results are resulting from the company's e-commerce efforts. Recent refinancings are expected to reduce interest expenses. The company currently trades at a price-to-earnings multiple that is quite low relative to its past, which is the reason why we believe this company has significant upside potential. And also the financial results have improved due to the congressional tax cuts. On to the next slide. The why now, the bull rationale. The reasons why we're optimistic with Sally Beauty Supply is because of an expectation of increasing sales or revenues per share. They have low valuation metrics right now, and they expect it to have low valuation metrics in the near future. And the change in capital structure, which is driven by projected share buybacks. On to the summary slide. The financial statement quality of Sally Beauty Holdings is good. The net profit trend is improving. The price pattern trend, as we noted, it's negative, but we just don't see the company being able to stay this cheap much longer. Industry outlook is positive. Solid GDP will drive further results, we believe. The overall market outlook is positive. So the recent closing price for Sally Beauty Holdings is $15.02. We see a 6-month price target as high as potentially $33. So the 6-month upside potential we have as greater than 50%. And for all these reasons that we believe that Sally Beauty Holdings is the best growth stock to buy right now. We hope you found this presentation helpful. We'll talk to you again soon. Take care.